Looking at the Markets with David Modell. Welcome to Looking at the Markets with David Modell. Today I have the pleasure and privilege of speaking with Mr. Pierre Lawson from Wall Street Jackboys with a Z.com. Great stuff. Love the website, love the Facebook group, and we will be talking about that. But first of all, welcome Mr. Pierre Lawson to Looking at the Markets. Hello, sir. How are we doing today?
I'm doing pretty awesome, man. Thank you for asking, and thank you for having me on the show.
Sure.
It's truly an honor, man. Thank you.
Yeah, absolutely. Can you tell me about your background in trading and finance?
Well, you want to start like how I got into it, or just my background on it?
Yeah. How did you get started in the whole options game?
Right. To try to shorten it up, my background is from the music industry. So I come from the music industry, songwriter, artist. I ran a label, and then I got into production and then engineering. So very technical when it comes to the engineering side of things. As I ran and operated, my studio and a few other studios, built a few studios. But I left the music industry. I left the music industry and got into insurance. I got into real estate, and coming across those things, I landed across stocks. And I call these things the millionaire blueprint. So when I think about it, you have to have these things in your portfolio. These are typically things that you will find in the wealthy individuals' portfolio. So just coming across that. I ended up coming across learning real estate. I was doing real estate. I was doing like some tax lien, tax deeds, and some of the wealthy guru guys that got into long-term investing into stocks, and so I started to dive into long-term investing, what you call investing in stocks, and then seeing how they were starting to hedge their portfolios and things like that with options, and then generating income, and it was something special about options versus stocks. Stocks was good, but it was the whole options thing where seeing guys generating income. Now that really sucked me in. I was like, so you mean like I can like pay myself a paycheck type deal. I'm into that, you know what I mean? So
Yeah.
That's what led me into that.
I like the sound of that, generating consistent income, that consistent paycheck. Now, stock options have a reputation for being very risky. Now, are there ways for people to trade options more safely or with limited risk?
Absolutely. And that's the thing about with options versus stocks. There's so much more that you can do with options versus what you can do with stocks. So there are safer ways to invest into options. However, and you understand I have a background in insurance, so risk management is, that's what insurance is all about. It's all about mitigating risk, You take risk in everything that you do in life, whether you know it or not. I have, clients that, in the insurance world, they say, well, how are you guys going to deem me on my insurance if somebody hit me in a car accident? Well, the reason is because you decided to get in your car and get on the road. So every time you get in your car, you get on the road, you're taking a chance of being involved in a car accident. You say, I got to go to work. Well, that's just a chance that you got to take, right? So it's the same thing with investing and making money. You have to take risks to make money, so, and that's one of the good things about, for new traders, I think they have to understand, a lot of people don't really like coach them and tell them, is that you have to have experience. As you start to get experience, then you start getting better at understanding risk, and you get comfortable with risk. So that's one of the things as far as like new traders, they don't understand how to get comfortable with taking risks. But that's where the time thing comes in. So once you get comfortable with risk, then you will totally understand the whole investing game.
Yeah.
Yeah.
Absolutely. Now, I wanted you to tell me about this website, which I love so much, Wall Street Jackboys. And you got to remember that's with a Z, not with an S. .com. Yeah. Both the website and the services you're offering right now. And do you have any special offers for new subscribers right now?
Yes, actually, we have the new subscription. Of course, check out the website, Wall Street Jackboys with a Z.com. Right now we have the annual subscription where you get all our education courses, you get access to the blueprints, and then you also get the 40% off on the Wall Street Jackboys Trading Journal. Now I'm very proud of that one because that's something that's been very instrumental in my career, and I think that it's going to definitely help build our community of traders to help them mitigate their losses and grow stronger wins. But I designed it with that in mind, and it's pretty awesome, man. So I like that. You guys also get access to the private Facebook group that we have, almost 300 members that's in there, and we're still growing, but having that community, having the squad is what I call it. As you know, I'm not too formal with things, but I like to keep ththings real. So we're going to keep it real. We got a squad of other people that's doing the same exact thing that you're doing. So therefore, you got peer-to-peer relationships in there where, you're able to help, grow other people and learn from other people besides myself, you know what I mean? So
yeah,
that's what you do with the package.
It's a community at wallstreetjackboys.com and at the Facebook page, and we'll be talking more about that. Just wanted to get into the options specifics. Open interest. Now that is defined as the number of options contracts that are still open and have not been closed out or expired or exercised. Now, why do you recommend at least 100 open interest when placing an options trade?
Oh, good question, man. 100 or better. That's one of my guidelines. Of course, you can make trades under 100, but we try to have rules with trading and try to stick to our rules. And the rules actually are there to prevent you from, unnecessary risk as far as getting stuck in a trade. You have to have interest for you to be able to trade. You have to have other people that's in there so that you can, you have to have there has to be a buyer on the other end of what you're selling, right?
Yeah.
So you have to have other people that's participating in that. And if you have anything that's under 100, what the problem is what's going to happen. So say, for instance, if you're involved in a trade and you have, some nice profits, maybe you hit 100% profits, and maybe it was only 20 people that was in that trade, and maybe those 20 people are at work, working their regular jobs, so you don't even know. But what if they're not there? It's only 20 people, you know what I mean? This is for instance.
Yeah.
And you're trying to lock in your profits, you're trying to get out now, and so you put in your order, and then your order never gets filled. And then the price action starts to reverse on you. And then you start losing money, and you're trying to get out of the trade, and you cannot get out of the trade. So the purpose for me setting the guideline at 100 is to prevent, traders from getting stuck in a trade,
Yeah.
That's a bad feeling. So once you experience it, you'll know not to do it again.
Yeah, learning through hard experience, so other people don't have to make the same mistakes. They can learn from what you've been through. I like that. Yeah. Speaking of mistakes, what are some other basic mistakes that other new options traders might make, and how can they address these mistakes?
I think that and again, this is some of the reasons why I started Wall Street Jack Boys. I think when we have a lot of new traders that come in, and they buy, these programs to teach them how to trade or whatever the case may be. A lot of them don't really teach them how to trade. They just teach them teach them about options. They don't really teach them how to trade. And a lot of the mistakes come from being, not having the proper education and the application for the knowledge that you get. And so what happens is a lot of times they have information overload, all this information on it, but they don't know how to apply it. They don't know what strategies and things like that.
Yeah.
And I think ideally, one of the so what happens a lot of times, a lot of people try to get the education stuff for free, right?
Yeah.
But free comes with a cost. And so the thing is you can go on YouTube, you can go try to research a million videos, and yeah, some people can, become successful at it. Probability of that is probably very slim though. With options, it's a very complex investment vehicle, if not the most complex that's out there. So ideally, you need someone that's going to be able to hold your hand and walk you through it. Without that insight of the wisdom of someone else that has experience, that you're going to lose a lot of money. And that's the cost on the fact of, free comes with a cost. Well, the cost is your accounts. You know what I mean?
Yeah,
so I would say invest in a great mentor, somebody that's great. Spend the money. Don't be afraid to spend the money, because we're teaching you how to make money. So you don't have to sign up with me. You can sign up with anybody else that's out there. There's a lot of great guys that's out there. So, being cheap comes with a cost. You know what I mean? I think that's a major mistake. There's several mistakes, but to me, that's the one that stands out mostly, because that's one of the things that took my trading to the next level is when I actually found the right teacher. So, yeah, I would tell anybody, don't be afraid to spend the money. I mean, you want to get a good deal on your education, of course. This stuff is very expensive, but, you know, it's something that you'll take with you to the grave. You know, it's like riding a bike. Once you learn it, you always know how to go in the markets and be able to get you some money. So
yeah, and if people are looking for a mentor or a teacher, I know that Mr. Lawson, you could tell just from the website and from the Facebook group that Pierre has a passion for teaching, and I think that's great. You're giving back to the community. Let's talk about the trading journal. What is a trading journal, and how are you using that?
Oh man, a trading journal, man, it is. Jeez, I don't even know how to build a hype on it, but I don't have to. Once you actually get your hands on it, you would be thanking me. So, the trading journal, man, it came around. Me and one of my partners, we studied under one of our mentors, and they were going over some trades and their decision making on a particular trade. He pulled out the spreadsheet, started plugging in some numbers, and he came up with, you know, the price that he was going to exit the trade and things like that. And it was just like, dude, how can I get my hands on something like that, you know? And it was such a hassle trying to get it because they don't offer it. It was something that they personally use, and they don't offer it to anybody else. And so they had, you know, created a price behind it. Like, well, if you want to get access to it, it's like $700. It's like, yo, that's a steep price, you know what I mean? Just for a spreadsheet, right?
Yeah.
And so I was just like, you know, there's got to be something out there. Went and did some research, couldn't find nothing out there. Not for options. They had some stuff out there for like stock traders, but for options, we're doing more complex, you know, things like spreads and things like that, where you got to put multiple legs of a trade. And then we're trading contracts, not trading the stock itself. It's a whole lot more, you know, complex mechanics behind options. And so I went in and started, you know, I've been building this thing for like months, you know, trying to figure out the right formulas and things like that. And I had teamed up with one of my partners out in Romania, and then we got all the formulas together, and you know, she put the design on it, and you know, and here we have it. So basically, what the Wall Street Jack Boy Trading Journal is a trade management tool that helps you to systemize your trades. And so that's one of the things when you start learning, you're going to want to be able to have a system in place if you want to make a business out of it, right? It's just like with any other business, you need to have a system for it versus just wildly trading. And so we have specific targets and things that we're looking for to enter trades, exit trades, and things like that, where you're able to put this information in the trading journal. And when you actually put it in the trading journal, it's going to give you the information, like the foresight of when you need to exit the trade so that you hit your desired targets. It tells you exactly what your contracts need to be at. You know, if you bought a contract at, you know, $1.20, say you sell a put credit spread and you want to close it out with a 50% target, you just plug it in and it'll tell you, well, you need to buy it back at 60 cents or something like that. I'm just going off the head here.
Yeah.
And so ideally what you can do is actually once you enter to a trade, you can go ahead and put in your exit order, like, because you already know your target. So it's ideally for someone who works a day job. You know, if you work and things, you're not looking at the screens all day like a day trader, but you just want to have a peace of mind and just, you know, understanding that, you know, I can captivate my profits and things like that. So, I mean, you can put it, you know, your stop loss and all that other stuff. But, I mean, it helps you with those things ideally. And then it helps you, you know, to go back, even with your losers. So a lot of times people talk about the winners. They don't talk about the losers. But, you know, when you lose, you learn. You know what I mean? So even when you lose, you learn. And then you're able to build on, you know, your knowledge and your education and your skill set by having that data in the trade journal. And so without having a trade journal, basically, you know, you just take your losses, you're just emotionally a mess, and then you have no data to go back on to try to figure out what happened, what went wrong.
Yeah.
And so with the trading journal, it's keeping track of all this data for you. You put it in, you can look it out, and then you can start building better strategies. You can take a look and say, hey, I win more with my put credit spreads than I do with buying calls. As a trader, that tells you, if, specifically for your brain and your personality, your strengths and your weaknesses. And so because you win more doing this particular strategy, this is going to help you to make other decisions in the future as far as, well, you know, I'm bullish on the stock. Should I buy a call? Should I sell a put credit spread? Like, well, I want to buy a call, but my success in buying calls is just really not in my favor. So chances are, because you now have this new data that's going to help, you know, affect your decision, you wouldn't buy that call. You know, you're going to do sell a put credit spread just because your success level is higher. Like, it's personal management there. So those are some of the details. Also, accounts, risk management as well. So a lot of times people teach you, of course, how to make money, but they don't teach you how to, mitigate risk. When we talk about mitigating risk, we're talking about blowing accounts. So also built into the trading journal, you have this risk management tool that's in there where you're able to put in your account. You're able to see the percentage that you're willing to risk. And we have certain guidelines in our group that, it's in the group. So once you subscribe, you'll be able to see the rules and things like that, what you're looking for. Whether you're willing to risk 20% of your account, 30%, 40%, 10%, whatever it is that you're willing to risk, you'll be able to put it in there, and then it's going to let you know how much money that you need to risk on each particular trade as well.
Yeah.
So when you put that information in, you're trying to make a play. Maybe you see a post that I may post that I'm making a play in Priceline or something like that, and it could be 10 wide or 5 wide. If your account might, probably can't handle that type of trade, but you would, you could. Some people just blindly follow people, and the thing is, everybody's accounts are different. You know what I mean? So you just can't follow any and everybody because your account is not set up the same way somebody else's is, so they can take on more risk than what you can take on. So the trade journal, it helps you to to understand those things as well. So
yeah, good stuff. Everybody should be keeping track in some form or fashion what their profit target is, what their risk is, what's their max loss on any trade, things like that. What are their winners? What are they doing well? What are they not doing well? And the Trading Journal is a great way to do that. Now, disclaimer, I always got to put the disclaimer, we are not licensed or registered investment advisors. We are not providing any trading or investing advice here. Now, given that, are there any stocks, companies, or sectors that are on your watch list right now that you'd like to tell us about?
Well, I'm actually flat in my positions right now. I went flat Friday before the weekend just because of a lot of the, geopolitical stuff. Mm-hmm. It's just really wild right now. We don't know if we're going to be in a war or not, So
yeah.
There's a lot of, things going on with, our country, North Korea and Afghanistan, all these other things. And these things, they have a huge effect on the market. So I didn't want to carry any positions over this weekend as well. I took my little profits and closed out. I haven't built my watch list for this week coming up because I normally do them on Sunday nights when I'm actually got some free time away from family, right? So I got some free time to take a look at that. But ideally, we always keep the FANG stocks in the database. So FANG stocks are always something to look at. Some of the first things that I do look at are the FANG. So that's your Facebook, your Apple, your Netflix, your Google. Also include the Teslas, the Nvidias, and Alibabas, and what else we have? The spiders, SPX, SPY,
sure.
The Russells, the indexes. So these are the things that stay in my watch list. And that's the thing about with options versus stocks. You don't have to really build a watch list or a scanner that's always scanning. Because we're looking for, we need liquidity for what we're trying to do,
Yeah.
So normally you always keep the high liquid stocks in your database because there's always some plays for you to be able to make in those type of stocks. So yeah, by my watch list, those are the things that stay in my watch list. FANG stocks, including the the Teslas and the other high liquid stocks right now.
Yeah. And if you're not in any positions right now, there's nothing wrong with that. Cash is a position, in my opinion. And,
right.
And it's not glamorous. It's not sexy. But you know what? Nothing wrong with keeping dry powder for when the opportunities do come up. Maybe when some of the volatility, when you get a nice IV, implied volatility spike, that's when you could be a salesman of options, and that's when I often like to strike. Now, I want to talk about your Facebook group. It's growing so fast. What can you tell us? Who should be joining your Facebook group right now?
Man, if you are interested in learning options, learning stock markets, learning how to make the stock market work for you, learning how your money can make money, then I definitely welcome you to join the group. This is the thing for anybody that's new that joins in there. It's going to seem like you're in a whole different country learning a whole different language. This is the language of money that we're talking about. We're talking about stocks and the world economy. So this is money all over the world. Over $16 trillion passed through the markets every day. And we're trying to participate and get some money in that. And, our community is also going to help you to be able to participate in it as well. So when you jump in the group, don't give up, you know what I'm saying? When you start out, you see a lot of things that you don't understand. You see charts and you hear, jargon that you're not familiar with. That is a part of the learning process, is being in that environment, so that repetition, you start to get it over and over again. Eventually it's going to come to you. So this is not a quick, get rich quick thing, that we do. It takes time and dedication, and just being in that environment alone is going to just help you to start understanding a whole lot of other things. And that's the way it worked with me. I jumped in with my gurus, and I was completely lost for like the longest of time, man. But, I seen them making money, and I just knew that, it worked, and I stayed in there, and, month after month until it clicked. And that's the same thing that's going to happen to you guys once you join the group. So if, you want to make money, you want to learn how to make your money, make some money for you, and we welcome you to join the group.
Yep.
Just send in your request, and then we'll scope you out and, get you in there.
Yep, and you'll see me in the group there sometimes as well. And I will be placing a link in the description of this video. Good stuff. Everybody should check that out.
Appreciate you being in the group too, David. Appreciate it, man. Sharing some of your wisdom there.
Oh, sure. I always like to go in and talk shop with all your people. It's great. It's great. Now I get the feeling you're a MACD guy. For those who don't know, a MACD is a technical indicator, moving average convergence divergence. But I see you use a number of technical indicators. Which ones have been the most consistently reliable for you?
Well, I guess the disclaimer should be that, there's no tool that is 100% accurate, of course. But we use these indicators to guide our decisions. Where I think I had a Q&A session, was it the other day or so? I was just talking about it to try to make things simple for those who don't, not familiar with the technicals. Just think about it as like, in school, just in basic school, elementary, middle school, whatever, you learn math, and in math and geometry, you go over patterns. And even if maybe you dropped out of school, maybe you got a GED or something, you work at a warehouse, you're an order selector. These same principles apply in like pretty much all the other stuff too. So, when you're taking your test, they test you on like patterns and numbers, and you have to be able to identify them. And so basically, somebody gives you a sequence of shapes like circle, square, circle, square, circle, square, circle. What's the next shape? Square. I mean, it's just a sequence. It's a pattern. And so the stock game pretty much works pretty much the same way. We use these indicators to help us identify these type of patterns and behaviors, which give us the insight of our outlook on the market. Whether we're going to take a bullish stance on it, or bearish, or neutral. But with that being said, the tools that I like, my favorite tool that I like to use would be the Fibonacci. I find that the Fibonacci has been, very helpful and instrumental into my trading, and it works more than it doesn't work. So
I've seen you use the Fibs as well as the MACD. Now, Fibonacci retracement techniques are known for being one of the more complex or challenging. Let's just say that probably if Elliott wave is the most challenging, Fibs might be second. So,
right.
Is it possible for a newbie at this to really grasp the Fibs?
Man, it takes time.
Yeah.
It's going to take time for anybody to grasp the Fibonacci. Even when I started out with it, I actually stopped using it for maybe a couple of months, like maybe 2 months or so, and I learned from the Fibonacci Queen. And it was funny because we were in a class, and I think I made a joke about it or something like that. I said something that was funny, and she was just like, she was like, you're gonna get it, over time or whatever. And so I wanted to buy the book on it. I was like, well, I just don't know, you know what I'm saying? Because for one, different people use the Fibonacci different ways, but you want to be able to use it the way that like the masters use it, you know what I mean?
Yeah.
And so you try to figure out the way that the experts are using it, that's, it's kind of hard. And I think that one of the things is for like most of the gurus on Fibonacci, they're not really good authors, in my opinion. This is my opinion, okay?
Right.
It's just like you have some people that are good traders, but they're not good book writers, and so yeah, they can make a lot of money, but when they go write a book, the book is a flop, because it's not going to help. It's not helpful for you.
Yeah.
So everybody that can trade doesn't mean they can write a book or anything like that. You know what I mean? Or doesn't mean that they can teach or, you know, all the other things that come with it. But what I've noticed from, you know, most of the gurus with the Fibonacci's, they're not really good authors, I would say. Most of the books just have, you know, a lot of charts. And so for somebody new, just looking at a bunch of charts, it wouldn't make sense, you know. Once you start getting experience and things like that, and you start looking at the charts and start making these connections, then it'll start to come, you know, it'll start to come better. But again, having the right teacher, man, I think that's one of the missing segments in the market is just having the right teacher that can really, you know what I'm saying, teach you, you know what I mean, like beyond the books. And I really use books for reinforcement, you know. Most of the learning comes from experience, you know, in the field, you know.
Very true. And I know that you have the heart of a teacher, I can tell. I have it too. I have a master's degree in education. And
Right.
yeah, you're right. Just because somebody is a great trader doesn't mean they're also a great teacher. Two very different skill sets, and very few people have both.
Right.
Yeah, absolutely. And finally, option credit spreads. Ooh, I love these. I love selling puts and calls to people who are bad at math. That's one of my passions. It's not nice.
Right.
It's kind of mean. But you know what? I feel that, you know, whenever I sell a put or a call to somebody and it expires worthless, I feel guilty for maybe a few seconds. And then I remember, you know what? They would do the same thing to me. They would take all my money and my grandma's too.
And you got to remember that you're a Wall Street Jack boy, man.
Yeah.
So you got to sticking in the doors and taking the money.
Collecting now let's talk about option credit spreads real quick if you have time. Collecting premium upfront and mitigating risk through spreads, because it is a spread. You're not just selling naked, as they say. Do you have any tips or strategies to share about these credit spreads and mitigating risk?
You know, basically, you know, if we're talking about, you know, selling the put credit spread, that's a bullish strategy. So if you have your outlook on the market on a certain stock or so is bullish, then this is a great strategy for you to use that has defined risk and reward to it. So it has a defined bottom, it has a defined top. And so, you know, versus buying a call, I mean, you have undefined top, you know, unlimited, you know, tops on it. But you have other mechanics and options that, you know, that it negatively affect you as a buyer versus being a seller, where sellers have the edge. And so ideally, you want to be a seller, you know, because sellers have the edge with time works on your side. And so the strategy itself is basically, it's ideal for if the market goes sideways or if the market goes up. You know, so you basically can win. It's three different ways the market can go. You can go up, sideways, or down. And this strategy here, you win in two different ways, 2 out of 3. So you have a 2 out of 3 chance of winning versus you doing the opposite, which is buying a call. You need for the stock to go up. So you only got 1 out of 3 ways to win. And you have to be right, and you got to be right pretty quick. With the strategy that we're talking about with the spread here, you know, your goal is basically to hold on to as much money as you possibly can, you know, by expiration. Ideally, we like to get out in and out of the trade before the expiration, though. But ideally, when I'm looking for in these trades, in particular, you have to be able to gauge risk, and so that's why I say a lot of things are not textbook. And I think that, you know, a lot of times when the new traders come in, this is one of my issues, is I was trying to stay textbook with everything. I'm like, okay, I learned this rule, and then I'm gonna try to stick to this rule in particular. But a lot of what we do really isn't so much textbook. You know, the textbook is like a guideline for you to start, but then your account, again, is different from everybody else. So you may be able to take on a little more risk than somebody else would be able to. And so when I set the guidelines in our group, when you're looking at the put credit spreads, looking at your deltas, ideally you want them to be somewhere around like 12 to 26 deltas. You know, that's what I'm looking for, in between 12 to 26. But on occasion, sometimes I'll go straight at the money because I know I'm gonna get a bigger credit. I'm gonna take in a bigger credit. It just depends on, you know, at the particular time, can my account take on this type of risk, right? So again, if I want to make more money, I'm gonna have to turn up the risk, and I'm gonna go closer to in the money, which is at the money. The further out of the money I am, that's the more safer I'm gonna be as far as making a safer move. However, I'm not going to take in as much of a credit as I would like to. So you just got to find your balance. There's no perfect setup, I would say. But as long as you have like that type of guideline, think of the safety anywhere between 12 to 26. If you want to take on more risk, take in more credit, go straight at the money, and then work your way out of the money. So I like to look at that, and in conjunction with the open interest, because you got to make sure you got somebody on the other side of the trade too, right? You got to make sure it's interest is there.
Trading options for consistent income, doing it safely, and doing it in a way that people can understand it. You break it down. I like that so much. Mr. Pierre Lawson of Wall Street Jack Boys with a Z.com. I recommend everyone should check out the website as well as the Facebook group. There will be links in the description, so scroll down for that. So thank you very much, Mr. Lawson, for sharing your knowledge with us today. And finally, how can people contact you if they want to tap into your insight?
Yeah, man. We got all the social media feeds going right now. You got the Twitter account, which is Wall Street Jack Boys. It's at Wall Street with the ST, so don't spell it out on that. It's WALLST Jack Boys. That's on Twitter. Everything else is like the way you see it on the website, Wall Street Jack Boys, as far as Facebook, Instagram. You can also hit us on the email, info@wallstreetjackboys.com. And we're very active on Facebook right now, and that's like our, I would say, leading platform as far as communication goes. So definitely hit us on the Facebook. Just send in your request when we get to you on that. And if I could share just a few last words here before we end the interview, because what we have, what we created here, and again, we just started the group, the Wall Street Jack Boys, 4 months ago, right? So April and January, so just started, right? And how we came about it is basically on my journey, I thought about all the hassles and all the negative things that I had to go through to get to, basically where I'm at now, to get the information that the masters have in their head. And there's so many obstacles that's in the way. And it's like, there's got to be a way to simplify this, right? How can we simplify this complex, process? Options is already complex as it is, but we need to be able to simplify it. I want them to simplify it in a form that, a 12-year-old can understand it, right? It's not enough that's out there. And so a lot of people that start because they have the bad teachers or have a wrong teacher, when I say wrong teacher, and David, you know what I was talking about as far as some people are not meant to teach. They could be good traders. They're not good teachers.
Right.
And so therefore you have a disconnect with this teacher and the student where the student feel like they're not getting the information that they need. And so what end up happening is that, they end up dropping out. They quit. And so that's why you have a huge unsuccessful rate of traders that's out there because they never got the right teacher in the first place. And they didn't get someone to hold their hand and walk them through the market, It's like taking you under my wing and giving you personal, coaching, basically. That is necessary for what we're doing. And so, again, get all the free resources that you can get, but don't be afraid to spend money to learn because you're going to need that. It's a cost. You're avoiding a cost. Should I pay this cost here so I can risk blowing my account, right? You rather blow your account trying to get the free stuff or to spend a little money that's going to help you to prevent that type of loss. So, weigh those pros and cons yourself. But, ideally when I started it, just from my background, coming from the streets and things like that, I have other people, in my life that I actually taught the options game, figured out how to teach them just using street scenarios and things like that. And it worked like perfectly fine because these things clicked with me when I was confused on certain subjects on options and things, like you talk about selling high and buying low, but you got to reverse the operation. This stuff is, complex trying to explain to somebody who has no idea what's going on.
Sure.
And so I try to, bring it down, and that's what we call down to earth, simplified, actionable approach to the stock options game. And we're breaking it down, in a form that, even the least sophisticated investor would be able to master the concepts. And so once I figured that out, I figured that I had a niche, because it's something that other people are not doing. And so it's mainly dedicated to urban community, my style of teaching, but make no mistakes, we don't discriminate at all. We have so many different people that's in the group. David, yourself, we have a lot of people in Canada, Ukraine, out in Ukraine, out in the UK. We have people all over. So, we welcome anybody. If you're into not being into a formal classroom setting where you got somebody that's, talking to you like the guy from the dry eye commercials, then definitely, get in on it, man, because we have fun with the teaching, and, I don't proclaim to be a guru or anything like that. I'm an experienced trader and I share my insight, and if you can learn from it, you can make money from it, then you should.
making options trading accessible for everybody. And this really is for everybody. It's not for, not for any demographic of people, whether you have a small account or big. You got to check out wallstreetjackboys.com. Mr. Pierre Lawson, thank you so much for joining me today. I really appreciate it today.
I appreciate it, man. Thank you. Anytime in the future, man.
All right.
Thank you for watching. Please like, comment, and subscribe. And I'll see you next time.